Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Michael.
The Nauss.
Uh-oh. Wait.
Are we on mute?
Mike.
Are we on mute? Unmute yourself, Michael. Come on.
Oh, here I am. You hear me now?
There we go.
Okay.
Come on.
What's going on?
What are we buying in Canada this morning? By the way, sweet beard. That beard is
yeah.
That's the hottest beard we've had on the show, right, Spencer?
Oh, there we go.
Oh yeah.
Is there a trophy on the way? Is that what's going on?
Well, listen, this is like episode number 7 or number 8 or something like that. So it's a small sample size. So easy on the trophies, right? We don't hand out 7th place trophies around here, right?
I will challenge the entire FinTwit community to come on and beat my beard. How about that?
I'm rooting for you. You know, if it's up to me, Michael Nauss wins the trophy, but we can't just be handing out trophies 8 games into the season, right? You know what I'm saying? Like, let's give some other people an opportunity. Would you agree?
Absolutely.
All right, what are we buying in Canada today?
Well,
American stocks?
Always American stocks. You guys have the best market. That's the one thing I love about being so close is...
What do you mean by the best market? The most liquid market?
Most liquid, most opportunity. To be honest, anything that's good in Canada's got an ADR down there anyway. So, you know, you can get exposure internationally, you can get exposure to Canada. You know, unless it's a really junky gold stock, you can probably grab it on the US exchanges. So,
and are there any restrictions in Canada for trading in American stocks? Like anything there you want to touch on?
No, absolutely not. And that's the beauty. We have a small amount of brokers here. We don't have as many as you guys. But yeah, I open up an IB broker. You have access to the US market. No restrictions, no problem. You can hold them in your retirement account. You can do whatever you want. So I would say 90% of my trading, even as a Canadian, is in US stocks.
Got it. So it's like America, but colder.
Pretty much, yeah.
Colder and more Canadians.
And better beer. But
better beer, huh? Wow. Is that true? I'm not a beer drinker, right? I'm more of a wine and whiskey kind of guy. But so I'll take your word for it. Is that just you being Canadian, or is that legit?
Probably a bit of both. Depends who you ask. If you ask a Canadian, it's us being Canadian. Or if you ask an American, it's us being Canadian.
How do you feel about that, Spencer? Would you agree with that, or you challenge that?
It probably depends where in this country you are, frankly.
I'm talking the big brands, right? I'll take a Molson Canadian or an Alexander Keith over
blue.
a little Bat, little Kokanee, all that kind of stuff over the big brands down there. But but I brought charts. If you guys want to talk,
what do you got?
We got. What do you want to do? ETN first?
Sure. So I was hoping to fight with Strazza because we've been on Twitter Space a few times. We're batting back and forth. So I'm a quantitative guy.
We'll get him on with you. Don't worry.
Oh, don't worry. We'll have that fight. I'm a quantitative guy. Everything I do, everything I come across is from back tests, from algorithms, right? You guys are top down. You guys are intermarket. I'm more bottom up. So every night I come in and I run a back test, and that back test then spits out a bunch of names and gives me some ideas from kind of algorithms I made. So this particular one is just a weekend or a weekly rotational system, and it's got 2 components. The first one is risk on, risk off versus the market, right? So if the market's doing some things that I determine risk off, it sits out, it sits in cash. It actually just woke up about 3 weeks ago. So these are all kind of fresh names. One thing I did when I was going through the list is I took out all the semis, and most of the things, because it's relative strength, it's looking for breakouts. Most of the stuff semis, I figure your audience and everyone is just sick of hearing, hey, Marvell's breaking out, that kind of thing. And just like you were talking about, a lot of people are saying it's 5 names, it's the AI pump only kind of thing. But right off the bat, we have ETN was actually the top of the list. It was above NVIDIA. It was above all of the tech names, AMD, all this kind of stuff.
Which is an industrial stock.
It's an Irish automotive stock, $73 billion market cap, breakout to, if not all-time highs, pretty close here. And again, these are sorted by...
These are all-time highs. Aren't they all-time highs?
I think they're all-time highs.
Yeah, these are all-time highs. Yeah.
So, right, a little more credence to your idea that, right, it's not just big tech, it's not just 5 names. This one's breaking out to all-time highs. Essentially, the way this algorithm runs is you try to get whatever best price you can Monday morning, and then put in some sort of ATR trailing stop and hold them as long as you can. So 53-ish% win rate on this. So all of these will have about that chance of working, and amazing risk reward. So yeah, automotive, $73 billion market cap. So it's, you're not worried about this thing going away overnight. Other than that, not too sure what most of them do, which you'll notice with a lot of these things. Next one is ALTR. This one's not all-time highs, but it's getting pretty close here. So we got a $4 billion market cap. That puts it more in kind of the mid-cap space. What's interesting about this one is it's already kind of almost doubled off of its lows there, right? So its lows were about $40, give or take, and it's knocking on the door of 80. I love when that happens, right? You get all of these stuff that are doubling off their lows, and they consolidate for a bit. Like you talked about, there's a lot of short interest in the market right now. If you get a double in your face and you're short, it's, you start to get yelled at. What you'll notice too is I put the RSI on the bottom of the screen. The crux of this algo is basically saying, show me stuff that when the market sold off, the weekly RSI never got under 30, right? And I think this is a conversation we had as well. Those are generally speaking going to be the strongest stocks, right? If it can't get under 30 on the way down, it means that people weren't really panicking when they were selling, right?
So hold on, let me stop you right there and just kind of let me dummy it down for those listening who might not be following RSI. What Mike is talking about is the relative strength index. It's an RSI, has nothing to do with relative strength. It's a momentum oscillator, just to be clear, which means that it goes from 0 to 100. That's what an oscillator means. So it's a momentum oscillator. And in uptrends and in strong bull markets, you get overbought conditions. 70, it goes from 0 to 100, 70 is overbought, 30 is oversold. You get overbought conditions. People are like, oh, JC, I can't buy it because it's overbought. It's like, well, how can an overwhelming amount of buying pressure possibly be a bad thing? Actually, it's not. It's a perfectly normal characteristic of uptrends. And what Mike was suggesting is that, obviously nothing goes straight up. You get pullbacks within uptrends, but what ends up happening is that you don't see oversold conditions. You never have that opportunity to get in. You don't see oversold. If you do see oversold conditions in something you think is an uptrend, you might want to question the validity of that uptrend. When you see overbought conditions, that's evidence of strong buying pressure. That's just a normal characteristic of uptrends. How did I do? Pretty good?
Pretty good. And just as the quant nerd, if you look at the math behind what RSI does, it's basically the average up move divided by the average down move, right? So if the average up move is really, really strong and the average down move is kind of weak, that's just going to tell you that you're in an uptrend. So as this thing is pulling back, and I've actually run a test about exactly what you're talking about, JC. I said, what happens is every time the RSI gets under 30, you bought the SPY, and it gets over 70, you sold the SPY. That's kind of how the textbooks teach it. And basically you participate in all of the down moves and you don't participate in all the up moves. So, right, you're buying at the beginning of 2001 and you're buying at the beginning of 2008 and you're buying at the beginning of 2021, 2022 when things start to break down. And then as soon as the market gets good again, you're out. So that's why I built this algorithm. I said, okay, well, what if I do the exact opposite of what a lot of the textbooks say and just buy the stuff that's never able to get oversold, or even buy them as they're breaking out. So a lot of these you'll notice, like ALTR here, it's just about to break through 70. Again, the textbooks say that's when you should be getting out of this thing. The math says a little bit different. It looks like something you should probably get involved in.
Something that Mike brings up is really, really interesting because we've all Mike and I are chartered market technicians. We have a CMT designation, which means that we've sat through a lot of exams and read a lot of books. Mm-hmm. Mike did it more recently than I did, so maybe I'd love to hear your thoughts on this. But when I did it many, many years ago in 2005, 2006, 07, what I found, and I didn't realize this at the time, but looking back on it, it's quite obvious. And when I go back and read the books, it's quite obvious that a lot of the intro to technical analysis, a lot of the, books on technical analysis really focus on mean reverting strategies and mean reverting conversations and the philosophy of mean reversion, when the truth is asset prices trend. So if you're constantly looking for mean reversion, you're putting the probabilities against you. And I think that the traditional textbooks and technical analysis, not all of them, so I don't want to just blanket all of them, but you'll notice that they, like Edwards and McGee, for example, which is super old school from the 1940s. I don't think they necessarily focus on a lot of mean reversion, but over the years, the more recent books seem to. How do you feel about that?
Well, I think it's so trading and investing really messes with human psychology, right? We're taught everywhere else you buy discounts, right? You see something and the price is going up, you wait for a discount or a sale, and that's the best time to buy it. But you're right. And there's not many things that we know for 100% in the investing or the technical analysis or the trading community. But one of them is fat tail distributions, which basically just means things trend way more than they should if the market was random. If the market was random, you would see a lot more mean reverting. The fact that you see a lot more trends mean that that's absolutely not the case. And, I spent about 10 years in the hedge fund space working with different hedge funds, basically trying to figure out how they make money and dealing with investors and all that kind of stuff. And so I have a pretty good data set to go from. And the ones that always did the best were always the trend following funds. They were able to get into these trends or these quote unquote bubbles and ride them up and ride them down. I was doing that in 2008. And the ones that were short all the banks as they broke down to new lows, those were the ones that survived. The ones who were betting on mean reversion in the banks were the ones who had to shut their doors. So there is academic literature talking about trading with trends, and then there's a lot of just empirical, the guys who've been around the longest. You look at, you've had on Brian Shannon and Lund and all these guys. If you follow what they do, a lot of it's just they're waiting for a trend to establish, and they're trying to find a way to get on that trend, and they're trying to stay there as long as they can.
Yeah, it's funny. Sean's just chiming in how Canadian guests are so much more handsome than our usual guests. Sean is not from Canada. He thinks he's Canadian because he's from Buffalo, and it's kind of like right there. So he thinks he's not Canadian. He lives in Colorado. He lived in Chicago. He lived in Florida. He's from Buffalo. He has no Canadian in him whatsoever. He thinks he's Canadian, which is hilarious. And the other thing that I wanted to talk to you about in terms of trend following, speaking of Sean, we put on this options trade in Meta a few months ago, and we have, we are very, very in the money in that trade. And I have caught myself. He's already out, actually. I have held, and on a couple of occasions, I have found myself looking to maybe take some off the table, to take some profits. And I look at the chart and I'm like, it's still trending higher. It's still trending higher. And I haven't sold it, and it's been very, very difficult for me mentally. I shouldn't say it's that difficult, but I've struggled a little bit in maintaining that position. And every time I look, it's up even higher, and I thank myself for sticking to that. And the only reason that I've been able to hold the entire position is because I remind myself that asset prices trend. People are climbing this wall of worry. And then Sean's like, JC, we're so far in the money, we don't have to worry about that decay going into expiration next month. So I have that in the back of my head too, that because it's so in the money, you essentially have like a synthetic long, if you will, in Meta. So, to your point on the trend following, that has really helped me in this particular trade. So we're seeing it in real time.
Well, and that's one of the reasons that I am so quantitative and systematic, right? This back test, for example, goes back to the early 90s, right? And it basically just models what happens if you buy these breakouts, you hold them. That gives you confidence for a couple things. One is I know that there's going to be periods of time that it doesn't work. And I know there's going to be periods of time of drawdown. I know there's going to be periods of time of inactivity. I can always go back to the back test and I can say, this is normal. This is kind of what happens. But the main reason is I can test scenarios like that. Like what happens to this model if I start taking profits really early and it falls apart entirely, right? So what happens if I ignore a couple stop losses from time to time? It falls apart entirely, right? It's one thing that I love that you guys do with Sean is that every time there's an options call, this is where we're going to get out. This is how we're going to manage risk. This is where we're taking half off, because it lines up with all of my models where the strength in trend following is the fact that every now and then you're going to hit it right out of the park, right? Every now and then, like most of these models, again, 53% win rate on this one. You're not winning every time. You're not winning most of the time, but it's that every now and then that you hit it out of the park, but you need the patience and the discipline and the calm to kind of stick with it. And then, to kind of shut up the voice in your head that says, oh, you're up so much money, you got to sell, because it's that one or two trades a year, one or two trades every few years that will really make the difference.
Because when I've been looking to potentially take some off the table, it really only is, it's gone up so much. That was my only reasoning. And then when I look at the chart, I'm like, that gap fill takes it to 300 and we're in the 250s. So, and it doesn't expire for another month. So maybe I should just hang on to it. And fortunately, I have. And working with Sean, I'm telling you right now, as much as I like to make fun of Sean, I have learned so many lessons directly from him. And this is one, like just understanding, the mechanics behind the in-the-money calls and that risk of that deterioration, that decay, the gamma and the theta and all that stuff that decays into expiration when you're out of the money is not relevant here because we're so far in the money. So just a lot of lessons coming through from a trend following standpoint, from an option standpoint that have really helped me personally with this trade. Because listen, I know that when we talk and, we're breaking balls and it's me and Strazza and Spencer, like we sound confident and excited and I'm only confident in that I've done a lot of work. That's all I'm confident in. But, at the end of the day, we're all humans. We all have our own flaws. It's about understanding what those flaws are, trying to overcome them, continuing to grow. And if I'm going to give myself any credit at all, it's not about being super smart. It's not about being perfect. It's about my open-mindedness and willing to continue to learn. If I'm going to give myself any credit at all, it's going to be that.
Yeah, and it's a never-ending battle, right? In trading, kind of the worst enemies yourself. I always think that as much time as I spend back testing and all of this, if you didn't have the discipline to follow through, again, this system had been in cash for a year and a half that I, traded other systems and shorter term systems and that kind of thing. But you're right, the temptation to say, well, maybe we've bottomed this time, or maybe we've, and to deviate from that gets really, really strong. And it gets, I think sometimes the hardest thing is to do nothing, right? And whether you're in a trade and you need to let it go, or whether the market's just not lining up with what you want to do and you need to chill out. It's a really hard thing to do nothing.
Just because you didn't enter a trade today doesn't mean you didn't go to work. And I think right. People like, oh, I didn't put a trade today, so I didn't do any work like that. Don't think that way. Don't think that. Michael, tell the folks where they could reach you.
I'm easily Googleable. So Michael Nauss, Twitter, YouTube, and then statsedgetrading.com is my website. I just send out a free newsletter with my market thoughts, so you can just join that, but nothing to sell you.
You hear that flex, Spencer? Just Google me. I'm kind of a big deal.
Google me, man. Google me.
I'm a big deal.
Michael.
Easy to find. No big deal.
Always a pleasure, man.
I can't take no loss. I don't even know what it costs.